Ladies and gentlemen, how we doing? I hope you're doing great. Matthews here from M&F FOREX Traders. I'm here with a breakdown on AUD Swiss. A trade we took I think a week ago. I wanted to actually come to you and show you exactly what happened, what made me take this particular trade, and everything else, right? So make sure that you watch this video to the end so that you actually see all the steps that actually I took for me to actually identify this setup and be able to take this trade. Okay. And by the way, this trade was shared in our private community, and yeah, it was a really beautiful trade. So let's go to the 1 hour time frame. I show you what I actually saw, and I'll show you the before picture and everything else. So what you're going to realize is here is that the market was in an uptrend. Okay, so on the higher time frame, this was a retracement. So what we had here is the market giving us a QML here, a low, and a higher high right there. I know some would say this is almost the same level. So what you can do is that you can do this. So you see that they're almost at the same level right there. Okay, so this is what we call a QML shadow. So after that, we had a lower low being formed. And if you look at the candles that broke the structure, we had momentum candles right here. Apart from that, we had the resistance here and another resistance right there. So another interesting thing that we had here, if you look at this level right here, you realize that the market started compressing. We had a compression, which is a rising wedge. So this kind of setup is what we call the CPLQ. QML setup plus CPLQ, which is compression plus liquidity. So what we had here is the market compressing. After that, we had the market pushing really hard to the downside, breaking that level right there, breaking this rising wedge, and then we going back to retrace, and then we actually dropped beautifully about 200 and about 250 pips, guys. This market dropped about 250 pips. And how long did this trade take? This trade was actually, let me just show you. We took this trade on the 21st of April. You can see this where the setup was. It was like at that level right there. This was on the 21st of April. You can see the date right here. And today is the 28th. Of course, this trade actually reached target last week. I was just trying to show you guys. You can see how beautiful the entry was, and look at where it is now. So from here, this was on the 21st of April. Target was reached on the 25th. So this trade literally just took about 4 days to actually reach take profit. And this trade was a 1 to 14 risk to reward ratio. A beautiful trade. Okay. So of course, with such trades, of course, this one didn't really have so much to actually that it can actually cause you to actually want to get out of this trade, because this trade was literally just going to the downside, move after move, move after move. You can see it was just a nice run to the downside, right? So it was a really nice setup, and yeah, it was a really beautiful setup. So if you've noticed by now, we are always taking these kind of setups that actually offer us more than 1 to 5 risk to reward ratio. We don't take any trade that gives us anything less than 1 to 5 risk to reward ratio. So what that does psychologically is that it helps us absorb the losses. You understand what I mean? So I can take 10 trades, and out of 10 trades, for example, if I lose 7 trades, right, meaning I just won 3 trades, and if those 3 trades reach take profit, just one trade is going to cover up all the 7 losses. That's the reason why we end up having a positive expectancy over a series of trades, because we have a good risk to reward ratio, a really nice risk to reward ratio, such that It enables us to actually lose and still make money. And that's how it's supposed to be. And we know by now that we have no control over outcome. A really, really nice trade setup can actually turn into a loser at any particular time. And if we understand that, there's no way we should try and over risk on any particular trade, because you know that at any particular time, anything can happen. And that's what most people don't talk about. Because most people won't show you when a trade goes in your direction. That's what most people show you, which is unfortunate because losing is part of the game. However, when you have the positive expectancy and when you have a setup which gives you 1 to 10 risk to reward ratio, 1 to 11, one, like for this, for example, this trade was like 1 to 14 risk to reward ratio. I mean, even if you got wrong, and if you were wrong 5, 6 times in a row, you just need one trade to actually make all the losses up. Just one trade. So in our group, we just need like 1 to 2 good trades per week to actually hit about 10% profit. Just 1 or 2 trades because of the good risk to reward ratio that we have. You can see this was the exact same setup, and yeah, and that happened. That's what we do on a daily basis. We identify our setups. As long as we have an edge in the market, as long as the market has presented with us an edge, we will take that particular trade without hesitation, without fear. Why? Because we know that we have no control over outcome, and therefore the only thing that we can do is to continue to objectively identify our setups. As long as we do that, the outcome will take care of itself. We should not focus so much on the money. The focus should be, are we taking the right trades? If we are, then the outcome will take care of itself. So that's what we teach in our private community. That's what we teach in our mentorship group, is to adopt a series of trade bases. Okay. Of course, losing trades are always going to be there. Trust me. I know most people won't tell you that, but hey, that's the truth. Losing trades are always going to be there. You're always going to lose. Always. But however, it's about you learning how to lose. You need to learn how to lose. When you lose, get out of the market. All right? When you lose, get out of the market, because anything can happen. Look at this. Beautiful trade setup. Really very beautiful setup. What happened? It went against us. Does it mean that uh we're not like, maybe we don't know what we're doing? No. This is the same setup that actually works, but this time around it didn't work. That's not a reflection on you. Okay? That's not a reflection on you. It's all about probability. It's all about probability, and therefore you need to continuously execute. Okay? Look at this. Exact same setup, right? Guess what happened? It failed. It failed, right? Why? There's a random distribution between wins and losses. Look at this. It worked out, right? This is like over 8 on gold. Beautiful trade. It worked out. The same setup. So this is what most people won't tell you. It's all about consistency. Provided you've actually learned a skill and you're able to objectively identify your setups every time, then the only thing that you need to do is be consistent in following your plan, be consistent in following your risk management, and the outcome will take care of itself. That's all you have to do. All right. So I hope you find some value in this content. If you do, make sure you subscribe and let us know by leaving a comment in the comment section. Let me know that I've actually subscribed. Hit that bell notification so that you get to be notified every time we drop such videos for you, so that you can actually learn and improve and become a better trader as time goes on. All right, until next time, goodbye.